Hello YouTube fam, you're welcome to today's episode of my week, how my week went. I try to do this every day to document my progress, document what I did well and what I didn't do well. All right, like the last video I talked about how you can learn from my success, how you can learn from my mistakes. Okay, so you shouldn't give up on whatever it is that you are doing. You need to understand that it's all about consistency, it's all about risk management, and moreover mindset, because you can have the right strategy, you can have the right edge, but when your mindset is not in the proper state, you will always lose. You understand? And when you lose, you will not come back to trying to recover from your losses, because one thing is certain: you must take losses in this market. The market will hit you whether you like it or not. The market will hit you. So what you need to do is to have a bulletproof mindset, that you should know that there will always be another setup. There will always be another setup for you to take and leverage on and make back whatever loss that you had in your past trade. All right, so we are going to go over to the chart and I'll explain to you the trades that I took this week, and we just learn from it. All right, so let's head on to the chart. All right guys, we're on the charts now, and you would see that from this chart we have the market. Last week I was telling you guys that we are in a bearish market. As of when this price action was showing up, we're in a bearish market. So if you look from here down to this place, that was when this trend line was broken. But then if you look down here, you see that the market took liquidity. One thing you need to understand is that liquidity is what moves the market. If the market have not taken liquidity, there will be no way the market is going to move. So you need to understand that for the market to move, there must be some level of liquidity that was taken. So we had this point, we had this low here that was taken, and you see how they came, they purged that low. All right, so after purging this low, now what was the next thing that you see they did here? They broke this structure. So when they broke this structure, that is a change in market direction. That is a clear change in market direction. So why is that a change in market direction? Why? This high was responsible for this low. This high was responsible for this low. So this made this high, it made this high to be a valid swing high. All right, it made it to be a valid swing high. So that's, and then we had displacement, and then we had this fair value gap. All right, this was a trade that happened on a Friday, but then our buyers, we have gotten our buyers to be bullish. So now that our buyers is bullish, what are we looking for? All right, on Monday, that was 12th. Like I told you, I normally take my trades from 15 minutes time frame. Our bias is bullish. What are we looking for? We are looking to enter the market for a buy. All right, so for a buy, we have these highs taken out. All these highs, it was taken out here. All right, then we had the retracement. So this pullback was into these other blocks. Now you see we had about 3 other blocks into this zone. 1, 2, 3. Let me enlarge it. So that would have been the first entry for you, because if let's look at 30 minutes and you see how the other block came out. Good. You see that we had this one and this one. These are the last two candles. If you put it together, it will become one candle. It's just one candle. This is 30 minutes, this is 30 minutes. Let me see on 1 hour if you can see something. Now, good. So you see on the 1 hour time frame, we have the imbalance, and we also have this last down candle. So looking at M30, you'd see that we had that order block. This was also a fair value gap, taking out this high, and then this high too was taken out with this bullish candle. Then this was the retracement. So if you missed this out on Monday, that was during London section. If you missed it out on Monday during London section, here is another opportunity. This was another opportunity, particularly this trade. I took this trade, and my target was the external high. So this setup is a continuation setup. It is not a reversal setup. Why is it a continuation setup? Because already the market is moving higher. All right, the market is moving higher, and we are looking to buy. We are looking to buy the market. So what you do on this is we'll have the break of this structure, that is your BOS, with this momentum candle. You see the way the candle pumped through, breaking this high, giving us a full body candle close. Also, we had a full body candle close here. Then we had the retracement. So the next thing that you are looking for when you have that is your order block. Remember your premium and discount levels. Your premium and discount levels are places where the market comes to book and take in orders. They book profit and take in orders from these zones. All right, so this would have been another zone for you, late New York. Though this one entered into Asian session, you would have held it till the following day in London. You see how they came and took out this high, which is my final target on the following day. So with this, you can actually do intraday or day trading with this type of strategy. So you'd have targeted this order block and put in your pending order. You put in your pending order at this point and set your stop loss. So in this case, you set your stop loss at the extreme low of the order block. So in this case, you would have had 7 pips, and then your take profit will be 34 pips. So that's a clear 1:4. 1:4 risk to reward, and this was a very good trade. On this, the following day, we had also this momentum candle. So when we had this momentum candle, we also had an origin, that is an order block where the market started, or let's say where the push started, when the momentum candle started. So in that, we had this move up, come down into this order block. You see how they tapped into it. First touch, second touch, beautiful touch. You set your limit before this market gets to it. You just set your limit to that order block, putting your stop loss. In this case would have been around 6 pips, and set your target. So this target would have been 31. On this one, you can decide, okay, let me take out 50% profit, or 30% or 70%, as the case may be, depending on you, and you just leave some to run. So you see that the total it went for that day was around 94 pips. All right, 94 pips. Now the reason why I trade GBP USD is because GBP USD respects my strategy. It respects this strategy very well. So this was the trade that we took on Tuesday. Then on Wednesday, there was no much of a trade. There was no much of a trade on Wednesday. You can possibly take this one. You can possibly take this one, but then there was no much of a trade. Why? Because our bias was buy. We were looking for buy trades. That was the reason why I did not really take any trade on Wednesday. Then on Thursday, we had this news. This was PPI news that traded into this fair value gap here. Traded into this fair value gap. and then give us a clear confirmation on M30, right, with this pin bar, and then we enter the trade. So on Friday, which was the end of the week, ending of the week, we took I had some slack on this trade. Yes, because I entered a buy and then they took me off, entered again, they took me off. You know how Forex works. So I now had to wait for this buy, and I took the buy, and it hit my take profit at this point. This was, I always take my profit at the high that started the retracement. All right, that's where I take my profit. So the trade that really hit me off was this Wednesday trade. This Wednesday trade, because I had my SL around here, and then they came here and took me off on Wednesday, so I just had to leave it. All right, I had to leave it on Wednesday, and then I used Thursday and Friday trade to cover for my losses. So that is it for the week. I'll see you on the next one. All right, guys, we have finished analyzing the market, and I believe that there are some things that you learned from that. You learned how we do the analysis and all that. Now, for you to get in-depth and detailed analysis, we have a community where we do this analysis, and I teach you how you can be able to analyze the market on your own and be able to make money on your own. All right, across the board, I have trained a couple of students, a lot of students, and they are doing well on their own. All right, so I'll leave the link on the description of this video, and you click it so that you can join the free channel and be able to participate on our daily analysis, because we do analysis every trading day. All right, every trading day we do the analysis, and then we try as much as possible to make everybody to understand what we are doing. Okay, I'll see you guys on the next video, and I hope that there are so many things that we are going to learn. All right, until then, peace.